It's official. Rates are higher for longer, and home prices continue to rise. So instead of focusing on the interest rate, everyone tells you to focus on the monthly payment. But what if the monthly payment is already stretching your monthly budget? Well, I want to share strategies that you can employ right now to lower your monthly mortgage payment. These are the conversations I'm having literally every single day with both current home buyers in today's market, as well as buyers who bought a year ago with the anticipation that we would be seeing lower rates by now. There was a lot of speculation, some way lower than I ever thought possible, speculating that we could see rates back in the 4s again this year. Well, here we are, halfway through 2024, and rates are not coming down. In fact, they continue to remain stuck over 7%. Inflation is much stickier than anticipated, and the Fed is now holding on to their higher for longer mantra. I'd like to highlight some of the data reflecting how consistently strong our real estate market has been and continues to be, even though we have higher interest rates. Then I'll share several strategies on how you can capitalize on a lower monthly payment. And I'm not just speaking to new home buyers coming into the market today, but homeowners who bought after April 2022. Every week, I have a number of conversations with homeowners who bought a home over the last 2 years using another lender. They're sharing with me that they never had a conversation about their long-term goals, or if that payment met their budget. Or what happens if rates do not come down as quickly as we all hope? Those homeowners are wondering now if selling is their only option, and it's not. But before I jump in, do me a huge favor and share this video with someone you know who needs it. Someone looking to regroup and keep their home, or get into the market knowing their goal is long-term home ownership and all of its benefits. Comment down below with your questions and situation. I personally answer all the comments and would love to support you. So let's get real. Home prices are not coming down, not meaningfully at least. CoreLogic just reported their March data showing nationwide appreciation hitting a 9th consecutive all-time high, with home prices increasing 6.5% year over year and 1.3% month over month. If you live in San Diego, you're certainly feeling the home price crunch with an 11.1% annual increase, followed by New York at 9.2% and Cleveland at 8.8%. Denver, meanwhile, has slowed down to a 2.1% annual increase, but is seasonally picking up with a 1.3% month-over-month increase as of March's data. It's important to highlight that this is home price appreciation measured on homes sold across the country, pinpointing specific home price growth, not the median or average closed home prices that we watch here locally or that data collectors like Realtor.com or Redfin demonstrate. Average and median is based specifically on those homes that are sold at that time. We also know real estate is hyperlocal, with some buyers in multi-bid battles, $10,000 to $50,000 over asking, while other buyers are benefiting from the nation's 35.5% year-over-year increase in inventory. In fact, we have the most homes for sale right now nationwide that we've had since July 2020. Here in Denver, we've returned to pre-pandemic inventory levels with a 51% increase in active inventory year over year as of April. This is helping some buyers get into and negotiate in this market. So, home prices are not dropping. How about rates? When will they give us some relief? Many would say not soon enough. In fact, Fed President Kashkari stated earlier this week that he needs to see many more months of positive inflation data before having the confidence to reduce the Fed rate. Fed Chair Powell said he also needs greater confidence to move rates off of their 2-decade high, saying specifically it might take longer than expected. Yeah. For anyone watching the economics, this isn't really a surprise. Prices started rising again throughout the first quarter of 2024 when they were expected to soften. And the job market continues to be strong with fewer people going on unemployment and an annual wage increase still a hot 4.4% entering into the second quarter of 2024. This is helping consumer confidence as it rebounded in May, even as persistent inflation worries continued. All of this to say, higher home prices and higher interest rates are not going away. So, how do you lower a monthly mortgage payment, ensuring you're able to keep it in budget and feel good about owning a home? There are strategies. Some are common and some others might be new to you. So let's dive in. The first is refinance into a lower interest rate. All right, Captain Obvious. I mean, that's a given, but how? I mean, some homeowners who purchased in the fall are sitting with an 8% interest rate right now. Rates today are hovering around 7.25%, but with low income or high credit, you can get into the high sixes. It might also make sense to buy that rate down and stop waiting for the market to fall on its own, especially if you have some equity in that home. Using that equity to buy the rate down could make financial sense. This is where a good relationship with a lender you can trust has your back is gold. Another way to lower your rate is to get rid of your mortgage insurance. I just did this for 2 of my kids, saving them over $100 a month simply by requesting the MI get dropped by their servicers. If you have more than 20% equity in your home and you're still paying for mortgage insurance, this is the lowest hanging fruit to lower your monthly payment. The third option is to put more money down, or if you own, recast. I'm always surprised by how many people still don't know about recasting. If you sold a car, or maybe you sold another property, or you got a huge tax refund, or you inherited some money, putting more money into the home can reduce your monthly payment. When buying a home, putting more money down not only will reduce your loan amount, but it could also drop off the mortgage insurance or get you close enough that paying one-time mortgage insurance might be super cost effective. As for homeowners, the idea of recasting is simply applying with your servicer to recalculate your monthly payment upon making a larger than $10,000 principal reduction. For every $10,000, you can save about $53 a month at a 7% interest rate. Recasting does not impact your rate or the terms of your loan, only lowering your monthly payment. But make sure you apply to the servicer before you make the payment. It's kind of a big deal since they won't recast on a principal reduction payment you've already made. Okay, so the fourth idea is opposite of the last one. What if you put less money down? Or you did a cash out refinance to pull equity out? Hear me out on this one. There's a lot of energy around rates still coming down. I've been telling clients it could be 6 to 15 months from now. If you're of the mindset that inflation is coming down, but a whole lot slower than expected, you would think that rates could be in the mid-fives again. If that's the case, having an extra $10,000 to $30,000 on hand can make a huge difference to your monthly budget. Now, I just told you that putting that extra $10,000 down could save you $53 a month. But what if instead you kept that $10,000 and you used $210 of it every single month to effectively give you a 6% interest rate? You could use that $10,000 over the course of 48 months or 4 years. Now, assuming rates drop in half that time, the rest is a really nice emergency fund starter. And number 5 is a loan modification. I'm talking to some people who are simply in a position where they need help and they don't have the equity in their home to make a difference. Before selling your home or letting it go into foreclosure, ask your servicer the process for getting a loan modification. Don't think of it as failing. Think of it as optimizing your options. This option has saved many people their homes. Higher for longer does not mean higher forever. Rates do change daily, in fact. And we all feel confident that as rates drop, home prices will primarily go up due to increased demand. Remember, mortgage purchase applications are at their lowest level that we've seen since 1995. Based on simple demographics and population gains since 1995, this number can only go up. If you need help making the best strategic decision for your family and your monthly budget, then we need to talk. I mean, don't sit on the sidelines wondering what options you have. Let's talk today so you know for sure. I'm Nicole Ruth with the Ruth team, and it would be my pleasure to get to work for you.